The GDP just went negative. The media says we're heading into a recession. Biden blames Trump. Trump blames Biden, which isn't helping his case like he thinks it is. But here's what none of them are saying. It was 5 plane loads of iPhones that caused it all. Here, I'll show you, and what that means for your next move. So let's begin by looking at what actually happened. The GDP is supposed to tell us how much the US economy produced. But in the first quarter of this year, it went negative, down 0.3%. And the media lost its mind, as usual. Panic, recession, collapse, the whole shebang. But hold on, consumer spending didn't fall. Private investment actually went up. Unemployment stayed stable and business inventories grew. So why did GDP go negative? I mean, the numbers don't add up unless something else is going on. So let's break this down so a 5th grader could understand it. Think of the economy like a lemonade stand. If you sell $100 of lemonade, but spend $30 on imported mix, you didn't make $100, you made $70. Now imagine that you panic and stock up with $60 worth of mix before prices go up, but you still sold the same amount of lemonade. Your profits, they look way smaller now, don't they? Because of the timing. That's what happened to the entire US economy in the first quarter of this year. And here's what most people don't understand, and in this case, it seems they don't want to understand it. It's much easier to point the finger at someone than look at what's actually going on. The government calculates GDP using this formula. Gross domestic product equals consumer spending plus business investment plus government spending plus net imports. That's exports minus imports. And it's that last part, exports minus imports, is where things get weird because imports are already baked into consumer spending, business investment, and even government spending. They have to be subtracted back out. If we didn't do that, we'd be double counting stuff made overseas as if it were made here. So when imports spike fast, like they did last quarter, it pulls the GDP down, even if the economy is still spending, hiring, and growing. Everyone bought more lemonade mix, but still sold the same amount of lemonade. That's exactly what happened. Trump's new tariffs were set to launch April 2nd. So in Q1, businesses scrambled to buy goods from overseas before the taxes hit. Imports jumped 41.3% annualized. Goods imports surged 50.9%, the biggest spike since 1974 outside of COVID. And that one move erased 5 full percentage points from the GDP report. And get this, Apple emergency airlifted over 600 tons of iPhones to the US from India in March, worth nearly $2 billion just to beat the tariffs. That single move warped the GDP number. And this isn't even new. In 2018, US companies did the same thing before Trump's China tariffs. GDP took a hit then. In 2020, UK businesses rushed imports ahead of Brexit deadlines. Same GDP dip. It's a pattern. Panic buying leads to import surge that leads to fake recession headlines. This isn't a collapse. This is what happens when you only look at the number and not the reason behind it. The media knows people won't read the reports. In fact, they probably didn't read them either. So they throw out scary headlines. GDP crashes. It's Trump's fault. Recession ahead. Whatever's gonna get the click. But this wasn't a collapse. It was front-loaded behavior reacting to new policy. And now that the rush is over, that drag disappears. This is where the opportunity is. Every time GDP dips, buyers freeze. Sellers get nervous. And if you know how to move, you get better deals. You negotiate terms. You close creatively while everyone else is scared. We don't panic when the headlines scream. We look under the hood and make our move. This dip was fake, but the deals it triggers, very real. Let's pause for a moment though, and let's play devil's advocate. Let's say we're wrong. Let's say Q2 does go negative also, and we enter a full-blown technical recession. What happens then? Well, history has a pattern. In the last 6 recessions, mortgage rates fell every single time. 1980, rates dropped 4.5%. In 81, down 5%. 91, down 2.25%. 2001, 2008, and 2020 all fell between somewhere between 0.5% and 1.1%. And you know what? When rates fall, buying power rises, especially for investors that are ready to move. Now, we're not starting at 18% rates like in the 80s, but could we drop another 0.5 to 1 point in 2025? Absolutely. Pair that with higher inventory and softer sellers and a president hell-bent on lowering mortgage rates, and you've got a perfect storm for acquisition. You've got cheap debt, nervous sellers, GDP-driven headlines that freeze the retail market. That's when smart investors strike. And historically, even in recessions like 1980 and 91, real estate didn't collapse. It corrected, leveled out, then bounced back up stronger. If you really want to get technical, there's never been a bad time to buy real estate, just a bad time to sell. All things said and done, here are the facts. The economy didn't crash, the math got distorted, the trigger, Trump's tariffs, the reaction, businesses front-loaded, the result, a paper recession. The opportunity, right now. Big numbers move the masses, but they don't move smart money. Real wealth transfers happen when everyone else is frozen. If you want to know how we're locking in cash flowing deals using none of our own money without applying for bank loans, even in a scary market, I pinned in the comments a note about this thing that we're doing in Vegas. Check it out. If you like what you see, join us. Also, if what I shared here doesn't align with your view of the world, before you start screaming liar, fake news, or propaganda in the comments, I also pinned all 76 sources that were used to put this video together. Either way, this isn't a crash, it's a reset. Move now or miss it. Hey, quick thing before you go. I'm running this weird experiment where I basically pay people to do real estate deals for them, and then I split the profits with them 50-50. And you can watch this right here to get all the details. And yeah, I know it's probably the most ridiculous offer that I've ever made, but it's working like crazy. And if you're thinking there's a catch, you would be right. I can only work with 2 to 3 people per city. So if you're curious, check out this video here to see if your market's still open. Or don't. It's not for everyone. Thanks for watching though. I'll see you next time. Take care.